VIX back down to pre-banking crisis levels. Fed with a stick save and a beauty.
Is that what happened?
I don't know. Who else do you want to give credit to?
Hey guys, JC Peretz here, founder of AllStarCharts.com, and I am joined, as always, by my esteemed colleague, Mr. Sean McLaughlin. What's up, Shawnee?
Man, I wish people could have seen the preamble right before we went live. You guys would have seen JC scrambling to get his final charts finished up and mocked up and looking pretty. I mean, man, that was a blizzard of activity. Well done, my friend.
It is, it's live video, right? There's nothing we can do. You're on a timeline. So I put together a chart or two in my day, Sean. So I got some practice. All right, so let's talk right about it. I'm going to skip right to this chart because this one is really one of the reasons that I'm so interested is just the relentless relative strength out of home construction. And this is despite the selling that we've seen in financials. And these things, when you look short term, they really trade together. And looking long term, they really trade together too. So this is just really interesting. So that's what stood out to me. Why did you call it out of curiosity? The KB. By the way, guys, we're talking about KB Homes, but I want to walk through why. Right?
Yeah. Well, when we like to laugh, we put it in quotes when we say the banking crisis, but whatever you want to call what happened in Silicon Valley 3 weeks ago with the banks, one thing that caught my attention, and we talked about it internally, is that as the banks were all getting killed and regional banks were getting killed and everyone was worried about interest rates and what's going to happen next, you would have thought that would have kind of filtered into the housing market and it's be shown by activity in the housing stocks. But man, the housing stocks that we follow had held up through that entire thing, and it was really noteworthy. And we had been positioned in a couple housing stocks before all that shit hit the fan 3 weeks ago. And I was like, man, I was in Toll Brothers. I'm in Lennar. I'm still in. I'm like, man, these are holding up well. I'm surprised by that. And so we were talking this morning about, things that we like. And I was like, man, I can't get it out of my head how well these home builders are performing. And then I was like, check out the chart of KB Homes. Like that thing just looks ready to roll. Like it wants to roll higher. That's where I want to get involved. And so that's the preamble to how we got into that stock today.
What did we just get filled in?
Oh, you like that? That was, what was that? Oh, I just got filled on little SPY options.
All right. No big deal. All right. So speaking of options, volatility's cheap here, right? So owning home builders, kind of just rolling with that relative strength. Just go out and buy the October 50 calls. You thought that was a little aggressive?
Well, I had concerns, right? I mean, look, the stock's trading at $40. I'm like, is $50? Are we being a little too aggressive here? 25%. Is that too far to go? I was drawn to the 50 strike in October for a couple of reasons. Number one, it's a nice big round number. That's the dumb reason. But the other reason is that strike right now is pricing in about a 25 delta, which for anyone who's been following me for any length of time knows that when I like to buy long calls for a move, I like to buy approximately the 25 delta option because I feel like that gives me the nice mix between leverage when we get it right and affordability when we get it wrong. Like, it's we don't have to invest a whole lot of money to participate. So I liked that, and it's the October 50 calls. October gives us 4 or 5 months for this to play out if it does. And look, I don't necessarily need KB Homes to break out to all-time highs for us to make money on this trade. We can make money in the meantime if this thing moves, at least threatens to make a move. That's what I like about it.
Well, first of all, it's 6.5 months for you math majors out there.
Sorry, man. Personal fast market over here. I can't think straight sometimes.
Listen, but that's a favorable correction. Like this, we win because I'm right on the math here. It's not 4 or 5 months. It's 6.5 months, ish. Like
even
that's
better.
A long ways away. And, in lower volatility environments, I love how they're telling us how this is a crazy volatile environment. And I'm like, well, volatility is so cheap. We're going out and buying calls actually. So it's the exact opposite in this particular market. But you would think, with all the commotion going on about rates and banks, you would think if that were true, that home construction stocks would get hit as well. They have not. They have been some of the strongest, particularly in consumer discretionary. Go across the consumer discretionary space. Home builders are really going to stand out. So these are the October 50 calls. That'll get you back to those former highs from a year ago or so. I don't think that's out of the question. 25% from here.
Yeah, and we paid $1.40, $1.45 for them when we got in a couple hours ago, which I think they're still trading around that level. So, it's a good price. And we talk about this all the time, JC. I'm a broken record when it comes to what I do when I buy long calls, but and maybe I'm too conservative, but that's just that's what works for me. I like to sell half of my position when I've doubled the value of the calls. So I paid $1.40 for them. If I could sell half of them for $2.80, $2.90, I will do that. That pays me back my original risk capital, and then I got a free ride all the way into October. And anything can happen in that situation, and I'm okay.
And I would add to that to put out the resting order now. I mean, you guys do what you want. We're all adults here, but this is something that I learned from you, Sean, is leaving that resting order because you're paying attention to something else. You're doing something else. All of a sudden, you get filled because it's just been sitting there. And you're just like, oh, nice. Just took half off on, free ride the rest for the next 3 months or 4 months or whatever it is, kind of brightens your day a little bit on something that you didn't even expect. I always love to do that. And it keeps you disciplined because you're already putting that order there. So it's just going to sell half automatically.
You know what?
Right?
I got a real world example to bring that home to you that just happened to me. So people may recall recently we sold naked puts in Berkshire Hathaway. I sold, I believe it was the April 295 puts. Doesn't matter. The point is, the story is, I sold the puts, and my goal was to buy them back for half of my original credit, right? And I put that order out to buy them back at half of, whatever the price was. Let's say it was 150. I put that price out. I put that order out. But you know what I forgot to do, JC? I forgot to set it as a good till cancel limit order. So it worked for that one day.
Rookie mistake, Sean.
Yeah, it was working for that one day, and then I forgot about it. And then, I don't know, a week ago, Berkshire did what I needed it to do, and my order would have gotten filled. In fact, some people in our community pinged me and said, hey, I covered my puts. Did you? You didn't say anything about it. And I was like, I looked at my account. I'm like, oh no. My order didn't get filled because I didn't have it out there. It canceled and I missed my fill and I had to wait another 10 days. I just got out of it today. I was kicking myself. I had a sure winner that I almost turned into a loser because I hadn't followed my own best practice of leaving that good till cancel order out there.
How'd you screw that up? You're better than that.
Well, I put the order out. I just accidentally forgot to set it as a good till cancel. That was what I did wrong.
Got to do it. No, it's funny that you who does this more than me on the option side for sure. And as long as you've been doing it, you still screw up. We're human after all.
We are.
All right. Well, listen, good. That's a great lesson, guys. I incorporate that. I mean, you taught me that, right? And I like those rules because you take half off the table. Now you're playing with house money, and you got 3, 4, 5 months till expiration. It can go as can go infinitely higher, so it's a good position to be in when we could be in it. We find ourselves in that situation quite often, which is a nice feeling. So kudos to you, Sean. All right. So we're buying the KBH October 50 calls. Keep it simple, stupid, relative strength out of homies. You buy the KBH, right? Go out as far out as possible. In this case, 6.5 months. Pretty good.
Stick with your homies, bro.
I like it. All right, guys. Adios.
Take care, everybody.